Today is Tuesday, March 25th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. Today we saw the consumer confidence come in slightly lower than expected at 92.9 versus the expected 93.5. If we take a look at the consumer confidence index chart, which is presented by the conference board, you'll see that this is where we're at right now. You'll see that the only time that it's been this low in recent memory was in January of 2021, which was right in the middle of the pandemic, so I highly doubt that the consumer confidence is going to actually drop any lower than what it was at that point, but it shows a good example of just how shaky the current consumer is right now, which can definitely negatively affect the companies that rely on consumers to purchase their products. We'll get to the SPY chart, but it seemed like for today the market sort of shrugged it off, and then new home sales only barely missed at 676,000 versus the expected 677. For the rest of the week, Thursday is going to be pretty quiet. We only have the initial jobless claims and pending home sales, but then on Friday we have the personal consumption expenditures index, which is always important because that's one of the three inflation metrics that the Federal Reserve keeps an eye on. Since the last update, the SPY price has gained more clearance above the 15-day moving average, and then the 5-day and the 15 are pretty much in the same exact spot, but right now the 5-day is still slightly below. I talked about it in my last update, but what we're really looking for is the SPY price to be above the 5-day and also above the 15, something that hasn't been able to happen since the downturn started on February 19th. So to have the 5-day get above the 15 would be extremely bullish, and the last time that this exact crossover occurred was on January 17th, which then resulted in a 2.65% gain for the SPY. We still are 6.53% off the high. If we take a look at the RSI chart on the bottom, it hasn't fully reached above 50 yet, which indicates that the market's pretty much right in the middle. There's not too much overbuying and not too much overselling going on. And then the MACD line did finally cross above the signal, so there's definitely still a lot of positive stuff going on, and I look forward to seeing if this bull run can actually continue. These are going to be all 14 of my current positions. Right now, Meta, Nvidia, Microsoft, PayPal, and Costco make up my top 5, and those are going to account for 54.12% of my portfolio. Definitely not as much red in the current positions as the last update, which is always nice. I really don't intend on having any more than 14 positions. I always do keep an eye on my watch list though, just in case there is a position that I start to like more than one that's in my current portfolio. But right now, there's really none that I feel like I should swap out, so I do plan on keeping my portfolio pretty much exactly the same. Right now, I do have 95.11% of my portfolio invested, which means I only have 4.89 sitting in cash. I do generally like to stay at 10% cash, but with all the dollar cost averaging that I was doing during the downturn, this is a position I find myself in. But I am totally okay with it because I do think that we are in for another big bull run. If I wasn't confident on that, I would definitely go ahead and try to trim some of my positions, but again, I do feel pretty confident about the markets. Since Monday, Pershing Square had a gain of 2.95%. My portfolio had a gain of 2.85%, and the S&P 500 saw a gain of 1.94, which brings us year to date. Pershing Square is at a gain of 4.06. My portfolio is at a gain of 1.94, and the S&P 500 is at a loss of 1.57. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.